Hello and welcome to this week's Weekend Market Report with AgWeb. I'm Joe Winman. Jerry Gohlke, president of the Gohlke Group, joins us for a special Turkey Day edition. Jerry, I've seen that you've been at a lot of events. You've been very busy lately, and with seminars and workshops going on, and you were recently at Cedar Rapids. I wanted to know how Cedar Rapids went, what have you been hearing, and also let everyone know that if they're around Watertown, South Dakota on Monday, you'll be there having another seminar on Monday from 11 to 2. So the Cedar Rapids, it's similar to what's going to go on at Watertown. So how did that go, and what all did you hear?
Well, I got an education again. I tell you, I listened to Missy, from she does the planter seminars, and she's an agronomist for Farm Journal, and I almost need to hear that every year. And now I understand why people that are in the marketing want to hear the same stuff sometimes, because it helps you remember things. And I learned an awful lot about fertilization and that type of thing. And then, of course, we got to meet a lot of farmers from probably within 100 miles of Cedar Rapids. And I think the theme that came through there, and I was also came there from Normal, Illinois, where I just listened to other CTAs, like all commodity trader advisors throughout the Midwest that had a kind of a large convention there. And kind of what's coming out of all this is that there's general perception, again, kind of like we've discussed for quite a while, that the crops north of US 30 or east-west through Rockford, Illinois, DeKalb, all the way west through Iowa, the north of there was some problems with too much water, and just about everybody that I talked to said that their yields were okay, but they got hurt by the extreme moisture we had in June, especially the heavy ground, the low ground, much more than they thought. And we even heard about some fellow from northwest of Peoria that was saying that, and also from northeast Iowa, east of northwest of Dubuque and that area, who was at the conference in Cedar Rapids, said that he'd have taken last year's crop any day. And so that was kind of our general idea all summer, that we heard about the best crops down south, in the deep south, where it was not so hot and they got plenty of water. They really shine all the way through probably central Illinois. And from there north, there's been some disappointment. So my opinion from all that is that, our ideas were right along, and just a little bit late, I guess. And I suspect that from what I anticipate, that the January crop will show less acres, and maybe the yield drop a little bit more. And from what I heard in Normal, Illinois, some of the eternal bears that were in the market that thought we were going, downhill and never to return, are now suddenly saying, this thing maybe got too low, and we could probably get a rally out of this going into spring. So it's going to be an interesting spring. Also, there are a lot of farmers, like we anticipated, who've got their powder dry, so to speak, and that, things don't get better in corn. I don't know if I'm going to plant as much corn as last year, and maybe gravitate more to a 50-50 rotation, because the market's telling us so far they don't want our corn and they want more beans. And so I think a lot of this is in flux, and we're going to have to see what January, February brings. But I think the market's getting smart enough to realize that maybe we better not take new crop corn too low, because we could end up with less corn planted, and maybe we may need it should we get an average crop next year, which nobody thinks we can. After you get 170 some bushels an acre, 160 looks pretty bad. Well, it looked pretty good 2 years ago. So a lot of information left, and I think there's more risk, I think, to the upside on corn, especially beans. I don't know. I think we'll get plenty of beans planted, and that may be the weak sister of the whole bunch. So a lot of information, met a lot of good people, and looking forward to Watertown.
Wonderful. It sounds like a really informative event. And again, you're going to be in Watertown on Monday, so there will be a link to that so everyone can see the agenda and register if they'd like to. But also, you spoke of looking at the next year, and this year is winding down, and but the economy's kind of winding up. We're in the holiday season, and a lot of shopping, a lot of money moving. Now, it looks like the stocks are going to end on a high note, but how do you think that's going to affect the future? What do you see coming? What should farmers look for?
Well, I think, from an agriculture standpoint, we want the consumer, whether he's in the United States or globally, anywhere, to want to be able to have the money to buy more stuff that we raise or sell. And There's been a lot of talk that the dollar is getting higher valued, which is competitive, makes us less competitive in the world market. But so far, it hasn't had an effect. I think the strong dollar has helped the U.S. consumer. I'm in Southern Illinois this morning, and gas was $2.73. You know, it wasn't that long ago, it was $3.73, and that's put a lot of money in consumers' pockets at the right time of the year. And I think if there's a shock out there, the first shock is that we're ending the equity year probably on new highs again. The stock market, the Dow Jones, the S&Ps, and NASDAQ are all new highs over last year, of course, and by 10 to 12%, which was not necessarily in the cards by the people who've been negative our economy for years and years, you know, for the last 6 or 7 years. For some of those economists that were in the closet looking for something bad to happen, they're still preaching the same sermon, but so far it hasn't happened, and I'm not so sure that it will. I don't think it will, and I look for our fourth quarter sales, probably in retail sales, the consumer, probably up 4% from last year. That's a good, healthy swing. A lot of money out there waiting for a home to park it, and a lot of consumers that are a lot more positive now than they were 2 years ago, 4 years ago, 6 years ago, and that's going to be healthy for our economy. And I think the one offshoot that we may find from this is that, you know, we've had high-priced cattle, high-priced meat, hogs, and pork, and some pork meat, and also beef has been very high to the consumer. And the fear has been that consumer resistance is just going to kill this thing. Well, it hasn't happened. And I think, you know, as we go along, once we get hit with, you know, $4 gasoline seemed awful high until we saw $4.50, and then $4 looked cheap. I think at some point in time here, we're going to realize that these high-priced cattle that we've had to deal with for the last year, probably when we drop down to a level that's still good, profitable for the producer of the livestock, may seem cheap to the guy that buys it, to the consumer that's going to the grocery store. We got used to doing with other things with $5 hamburger. We learned how to stretch it. It didn't hurt us so much. You know, $3.25 hamburger on sale is going to look like a gift. So I kind of like what happened out here because it's put us under a different, firmer foundation just about the time the economy is getting better. It's been getting better for about the last 6 years from different perspectives, my point of view. And if you're a Republican, you've been waiting for all this to change and thinking that nothing can happen, you've got to be positive because now you're going to control the Democrats in the House and Senate both. So depending on what side of the fence you're on, you can't deny that we got a better economy, and it may even get better now if you're in that persuasion. And also globally, we just had Europe expand their money, you know, their QE or their quantitative easing. They think they're going to do what we did. China has lowered interest rates. You know, for a lot of people out there, they say, well, you can't keep doing that. You can't keep doing that. And we've done it for 6 years, and you have to look at it and say, what else could you do? And what it's done is, so far it's worked. And for the naysayers that say someday we're going to collapse, this whole world's going to fall in around us, you know, I heard that since I was a kid under Reagan, you know, and it didn't happen. And I think we're treading new waters now on how to manage a global situation. And you never say never, but it looks a lot more positive to me. And that's good for agriculture because it's the middle class in China and the middle class in India that's going to come in here and hopefully want more of U.S. goods. So that's good for us. And at the end of the year, you know, this is Thanksgiving. We've got a lot to be thankful for. And I think the main thing to be thankful for here is that we live under an economy, whether you like our political system or not, we live in an economy that's second to none. You know, very few countries can ever match what we do in our ability to dig our way out of a hole if we are in one, and also to advance. So that's a major long-term thankful thing that I get out of this. And so far, agriculture hasn't been hurt too bad. And we'll see what next year brings. But I'm pretty friendly on next year as well. I think things will fall into place where, for anything, we're underestimating global demand, just for the very reasons I mentioned. The economy didn't fall apart, and so, you know, a 2 or 3% increase in a big economy is still a lot, and that's better than a 3% decrease. So I think it looks good going into the future for me.
Wonderful, absolutely. A lot to look forward to and a lot to be thankful for. Well, that wraps it up for this week's Weekend Market Report. Special thanks to Jerry Gohlke for joining us. And from everyone at AgWeb, we're wishing you a safe and happy holiday weekend.
And see you all in Watertown.